All right, we are live. Silver Doctors, Monday, the 14th day of the month of October. My name is Mike, the co-host, along with my better half, Mr. Half Dollar. How you doing, my friend?
Doing good today, Mike. Happy Monday to you here. Coming up in midweek of October. We're coming into the middle of the month, so this is getting exciting. We haven't had that crash yet everybody's been looking for, huh?
And that's been very interesting because I saw a lot of commentators pinpointing the 14th as the day that all hell breaks loose. And as
Hmm.
of now, I haven't really had a chance to check in too much of the markets, but we're going to
Yeah.
definitely touch on that and find out what's going on. But before we dive any
Yeah.
further, let's welcome a couple people and acknowledge their presence. So, as always, if you're watching us, definitely let us know where you're watching from. I would love to acknowledge your presence, give you a little shout out. And then also, if you have any questions or thoughts or articles or whatever you want to share, make sure you highlight at Silver Doctors in the chat. Or hopefully, the phone line works today. So, you can give us a call at 567 336 0844. And then you can have your voice heard on the show today. So, we
Mhm.
got Gary D says, hi all. That sounds good. I'll wait. We got Pabar. We got Benjamin. We got Chris. We got Big Kenny Boy. We got Tom. We got Amon. So we got a couple people in here. So welcome to this live stream. So, Mr. Half Dollar,
Mhm.
let's get it started this afternoon. What are some things you want to jump out with right away?
Well, right away, the big news in the financial markets and in the economy today is the trade war, and supposedly, what they're throwing out is phase one. I've been calling it trade war light. Um, Zero Hedge is calling it a farming package, right?
Mm-hmm.
So apparently, and who knows like exactly what's going on because I can't really make complete sense of it because Zero Hedge is reporting that this this mini trade deal, if you will,
Mm-hmm.
has been struck between the United States and China. CNBC and Bloomberg are saying China still wants to look for more time before they agree to any kind of phase one deal. So
Mm-hmm.
who knows what's really going on? But they're trying to throw out these little bones to all the trade war people, thinking that the United States is winning the trade war and there's progress being made.
Yeah. So
Mm-hmm.
yeah, I'm pulling up an article right now. Let me zoom in out. Oh, mess this one up. I'm gonna pull up an article here, and
Mm-hmm.
it's titled. What does me see here? It says Trump needs more than a phase one U.S. trade deal to boost 2020 odds. And so it looks like, so just from that article there, first thing I pulled up, first thing is 30 minutes old. It looks like the linkage between the presidential run for 2020 and the trade deal is all tied in together. So depending on this trade deal, whether something's ironed out or not, or they do it in phases or whatever they're gonna try to spin out, it has a lot to do with this presidential race coming up or that's underway now. So
Mm-hmm.
I would anticipate not getting anything done. Whatever, put like this, whatever will come out of this trade deal will be a rushed package deal. Like they're going to be rushing from the U.S. side, I assume, to put something in place to give some confidence that all this trade talk is worth people's while they're being taxed with these tariffs. So,
Mm-hmm.
yeah, we will see.
Yeah, those are good points, and which is also indirectly tying that 2020 reelection to the stock market, right? Because remember, the stock
Mm.
market was up on Friday,
Mm-hmm.
and we have the stock markets again. They're right near. When I was giving an interview a couple weeks ago with JC Peretz, he was
Mm-hmm.
talking about 27,000. Then the Dow started plunging and it got below 26,000. Well, it's right back up to 27,000 again and within spitting distance of new all time highs. So, it's just so many things that's why, like, just talk about progress
Mm-hmm.
isn't cutting it anymore. Look what we've done, Mike. We've stepped up the talk a little bit, and now it's not talk about progress. Now it's talk about, oh, there's a mini trade deal. So it's like, come on, why aren't people seeing right through this stuff? That's what I don't understand.
Yeah, so I wonder prior to I guess Friday's announcement of there being a phase one deal or some type of farmers package or whatever, there's a lot of tweeting right away. I noticed a lot of tweeting, a lot of people excited saying that something's in the works, something's in the works. Then within 48 hours, we need a little bit more time. Like was it overhyped and overblown as of Thursday, Friday, supposedly deal or something been reached as far as agreement wise, or what? Was this just something to hush over the market so the markets would end a little bit higher on Friday, head into this Monday? What do you think?
Yeah, I do because I think that there's just because you think that I take the more cynical look and I think they're
Mm-hmm.
going to try and bring a controlled demolition to the markets and to the economy. So I think that this in conjunction with the Fed restarting QE are just these kind of like final last push to the stock market. But one of the rhetorical questions I asked this morning is, does it even really matter if the stock market hits all-time record highs anymore? Because at this point, if I'm right about the economy going to take a downturn, and then the markets are coming down, right?
Yeah.
And because I think about it this way, right? If me as a parent, if the only thing I give my child, right, to eat is cheese doodles, and if the only thing I give my child to drink is big red soda, he's not going to grow up happy, right? He's not going to grow up healthy, right? He's not going to grow up with a bright future. This is what the Fed is doing, right? This is what all these little trade war antics are doing to the stock market. They're just giving them more cheese doodles. They're giving them more big red soda. And in the end, you're going to have to start amputating arms and legs because of diabetes complications, and they'll probably die of a heart attack when they're 40, right? So this is not essentially good. Pumping money into the system is not what we need right now.
Yeah. But so what pumping money into the system is what the financial sector needs because of the whole debt creation. And so it's really starting to become more and more obvious to me as I come across articles. I'll put some up in a minute about how the people who are in the know, they're actually getting out of the markets. And so you got people who are bracing for a recession or crash or market correction. They're getting into money market accounts so that they have some cash reserves for the fire sale that's going to occur eventually. And so that means there's going to be more of a sell-off of old conventional products. We got bonds and stocks and whatever else people are getting out of to hold cash. Therefore, they're going to be needing more cash because as people are selling out, they don't want that to show it with the equities markets. If the Dow is dropping at the same time they're doing all their monetary easing, they're going to have to eventually inject some of that into the markets directly themselves to keep this thing going. So, it's going to be a rough, bumpy ride for a lot of people.
Yeah. And, the bottom line about what we're talking about here today, Mike, are two issues going on, right? That's basically the only two things that are supporting this market right now. And that's the Fed pumping money and this trade deal. Yeah. And I know I'm bringing it around circle again, but I want to make an interesting point about this trade war. Since we're unscripted, we can do that. Can't we here today, Mike?
Okay. No teleprompters here.
No teleprompters. Okay. So, there was this news that I posted on Silver Doctors over the weekend. And basically it comes down to this, right? So this ties into the trade war and this ties into, whose interest is this really in? And is this really America's first? Yeah. There was this news that hit over the weekend. I reported on it over the weekend. It might hit Friday. But basically the second largest shipping container port in the United States is in Long Beach, California. And the Chinese were either in control or they were about to imminently take control of this shipping port. And the Trump administration, and we're going to come back to this too when we talk about gold here, but the Trump administration, for national security reasons, kicked the Chinese out of control of the second busiest shipping container port in the United States. Now think about this, right? So you're thinking, oh, that's good. Trade war, nationalism, mercantilism, all this and all that. Think about this, right? So okay, who's going to be in control of it? Well, who's going to be in control of it? A real estate development investment firm out of Australia. Does that sound like, a good shipping and logistics American company to take care of the second busiest port in the United States? No, this is a, bastardized, financialized way to run the world, by saying, sorry, Communist China, we're not going to let you control the port. We're going to give it to an investment firm out of Australia. Does that even make any sense at all?
It doesn't make any sense at all because that takes away from the Make America Great Again, or Keep America Great, whatever the new slogan is, because you would think that you would want to give more power, more access to American firms to step up and take the lead, especially when it comes to, as you mentioned, the second biggest port. So, it just doesn't smell right.
And wouldn't you want like a shipping and logistics company doing that instead of a financial bank? I'm going to send you this right here, Mike. See if you can get this link. And this is this right here is the About Us page, the Who We Are page of this company that's going to be controlling the second largest port in the United States. And if you read it, it's like, we have partnered with governments to finance, manage, and develop essential real assets. So this is basically a large-scale industrial real estate firm, right? So, then look at this, right? Read the last thing, the group. This group is a diversified financial group providing clients with asset management. How does that translate to jobs for Flyover America, right? Yeah. They employ more than 15,700 people globally, listed on the Australian Securities Exchange. what does the securities market in Australia have to do with the trade war between the United States and China? You see, so it's like this trade war stuff, even the things that were being touted as little victories aren't even really victories at all. And this isn't even touted as a victory. Well, it was actually touted as a victory, but the way that I look at it, how could you even call it a victory? Because here's the thing, right? Who is Australia's allegiance to? Right? Their allegiance, they got the Queen on the back of their money, right? Where is their allegiance, right? It's not in America first, right? Yeah. If it's at anything, it's towards London, right? Yeah. So while getting the communist Chinese out of there is one thing, is bringing in, the Australian Securities Exchange Traded Company a good thing too? I don't know, Mike.
Yeah, it smells funny. It smells
really
funny.
It smells funny.
Oh, man. All right. So I said, as we keep rolling, let's check in with the chat. I see a lot of activity over there. As always, if you got any questions or thoughts, highlight that Silver Doctor so to stand out. And so we got a couple people. We got Nashville, Pennsylvania, Florida. A couple people checking in. Let us know where they're watching from. We got Brooklyn, New York. And so it says, alternate news speculates trade deal include Chinese withdrawing CAL, exit support, and withdrawing mill assets from port of Long Beach. Marines training at 29 Palms may take port back. Some of our Marines training at 29 Palms. I'm not sure. I don't know much about that. Interesting. It says, question. Q says gold will bring down the Fed. However, the Fed owns the most gold. Seems self-refuting, right? Yeah, question. Gold will bring down the Fed. Yeah. Paul, what do you think about that?
Well, part of the problem is us ourselves, right? Because I go back to that example where, the Fed is basically feeding their child, which is the stock market, cheese doodles and big red soda, right? So what is happening is at a point, right, the child grows up and has to make some decisions on its own. Yeah. So will gold bring down the Fed? I don't know, because, the system apologists and the enablers and the status quo pushers are all still content, and they're sitting there talking about the Fed's, and it's really sick when you think about it. It's like a joke. Is this QE or is this not QE? Was anybody saying, what is the Fed doing to savers? Is anybody saying, what is the Fed doing to the U.S. dollar? Is anybody saying, what is the Fed doing to the elderly on fixed income? Nobody's bringing this up. So What's going to take down the Fed? Well, until the people grow up and make decisions on their own, nothing's going to take down the Fed.
Yeah, and speaking of the Fed, let me share something with you guys. Let me see if I can pull this up, because I think this was last week. I was just doing a little homework on my end to try to better understand how all this Fed stuff actually plays out. So give me a second. Let me bring up this page here, because I wanted to actually check out the Federal Reserve's balance sheet and actually find out some of the nitty gritty as to how they conduct their operations. So here's the statistical release that was given out on Thursday. And so I was checking into the whole repo market and finding out how much, is being spent here. And I was just, familiarizing myself with the whole assets liabilities of the Fed. And so after, I can summarize this, but there's 3 or 4 things that jumped out that really had me questioning, and I'll see if I can find them. And it was in the assets category. And so it's the fact that someone just mentioned gold. And it was very telling that gold certificates, as I mentioned a while back ago, is still on the Federal Reserve's balance sheet. And then there's something clear called gold stock. And so you got gold stock here, and it says I think it's $11 billion worth of gold stock that's on the Fed's balance sheet labeled as an asset. And there was something else here about, let me see here. Something else here. Where's it at? I got to find it. But so the gold still exists on the Fed's balance sheet as an asset. Problem is, it's in relation to those certificates that they're still holding. So in the Fed's vault somewhere, they're sitting on pallets of certificates as promises that they received from the Treasury back in 1933 about, the whole exchange for gold or whatever, which created the Exchange Stabilization Fund, stuff like that. So gold is still a part of the equation. And so I don't see gold bringing down the Fed directly the way we probably would want it to happen, when you have an gold certificate still as a part of their balance sheet, which means that they still have a claim to that gold through those certificates. So I'm not sure how gold will bring them down when it's still an asset to them. So that's what I was trying to get at.
Yeah, and I think some of this also comes from like the whole Q thing about the Q drops. I haven't followed that at all in like over a year, but just gold will bring down the Fed and stuff like that. I don't know if it's in reference to that. Ultimately, the U.S. is going to collapse under its own weight, Soviet style, right? I mean, this is what's going to happen because they're just going to print and print and print, and it's just going to get to the point where it's unsustainable.
Yeah.
Something like government spending is growing like twice the rate of tax revenues, and they're starting out with not QE, and it's $60 billion a month. What happens when it's actually QE? And how much is that going to require?
Yeah.
I'm starting to think that 1 quadrillion you were talking about is actually pretty closer to what's going to be reality this time around.
And the problem with that will be there'll be no way they can hide 1 quadrillion directly, because you can't spin off them announcing that they're going to do QE at $100 billion a month or whatever it might be, and it goes strictly to the financial institutions that are interconnected with those derivatives, and there not be some type of issue, because they're clearly bailing out the banks if they directly support or finance or back up or pay for or whatever all those derivatives that are spun out there in the banking system. So that definitely could buy them more time, but the question is, will governments allow it? And I got a feeling that the governments will, especially in the next 2 years as this whole political chaos continues to escalate with the impeachment, all that stuff, and then a new president term, all that stuff like that. So, yeah, I think the intermixing of the political and the monetary fiascos is going on behind the scenes can probably buy them some time, because most people are going to go focus on what's directly impacting them, and that's the whole idea of inflation. Like when they start seeing prices go up, that's when people might become more politically and monetarily active and doing some research for themselves. So, yeah. And so the one last thing I want to comment on this balance sheet here, that most people, and it's never been mentioned on the mainstream news, is that as a part of the agreement between the Treasury and the Federal Reserve, it's the funding of operations. And so everyone always mentions, or even they tout back, that the proceeds go directly to the Treasury. So they make no profit off this. And so it was a part here that I questioned that most people don't or may not be even aware of, is that out of their operations cost, where is it at? Out of their operations cost, the remaining balance of whatever it is that they receive profit-wise goes to the Treasury, but it's after they pay dividends to the shareholders.
Yeah. And isn't that 7%? I think it's 7%.
And so I'm looking at here. So let me see, where is it? Oh man, it gives a breakdown of their operations cost, and part of that is paying dividends. And so I'm thinking, like, who are those dividends to? How come those things are never mentioned in the mainstream news or anything of that nature? And so the institutions that receive the dividends are the too big to fail banks that are basically reaping rewards off of this whole system itself, and they're first in line to get bailed out when they need money. So how can you lose when everything is designed around you?
Yeah, and since the Fed's not audited, there's no way to know exactly where that money is going.
Exactly.
Where it's ending up.
Exactly. But this is some good stuff, man. I'm gonna put a link in the chat if anybody is interested in diving deeper for themselves. But it's always good to get a chance to see what's going on. But anyway, sorry, go ahead.
Yeah. No, yeah. So those are the two big stories that look like that are going to be dominating this week. Which they were dominating last week as well, right? There's two main things going on in the US economy right now. There's the Fed with their start of QE, and there's the trade war thing. Here's the point where I wanted to bring it into gold. Remember last week we were talking about the Shanghai Gold Exchange coming in and selling renminbi, financially settled only gold futures products.
Before you get started, we got a call. So apologize, okay. Paul. Hello, caller. What's your name? Where you calling from?
Hey, I'm calling from Missouri.
Missouri. How you doing this afternoon? What's on your mind?
I'm doing good. Hey, listen, I wanted to discuss a possible disparity that we've been seeing here, where Eastern banks seem to appreciate gold. Eastern central banks.
Right.
They say it is the way forward. We're going to accumulate it. We like it. We know we need it for a reset. Western banks, like, let's just use Canada as an example, this isn't all away. Look at England selling it for $300 an ounce back in the 90s. So at any rate, I'm wondering if the Western side of things think, well, we're all going to go digital anyway. We're going to go to a crypto. We're going to go to a digital form of currency. And the Eastern banks are saying, no, we're going to go back whatever we do next anyway. So what are your guys' thoughts on that?
Hey, good question there. Thank you. Paul, what are your thoughts on that?
Yeah, I would agree with that, because additionally, look at the problem in the repo market, and a lot of the speculation coming to that is that there's just not enough demand for all of this debt that's floating around. And a lot of it has to do with the fact that the U.S. is running these trillion-dollar deficits year after year, mm-hmm. and China and Russia aren't looking so much just to buy our debt anymore as they are to stack gold and silver. Mm-hmm. So, in the end, gold and silver always place that check on monetary policy gone awry, on fiscal policy gone awry. So I would agree with that. And the sad part is that Western governments, Western central banks should be preparing their citizens for what's coming. And, that's that's the scary part in all this, because we're just getting left in the dark.
Yeah. It's clearly a Eastern flight to safety, and they're basically going back into time. So the East is going back into time, getting physical, getting something tangible that as a measuring stick for what's coming next. Whereas in the the Western is going digital. They're trying to move forward to that next system in the announcement of the digital tokens and stable coins. And I actually came across an article today, let me pull it up, about stable coins looking like they're positioned as a threat against the financial establishments. So let me, stable coins. And so I found out to be very interesting how it looks like, stable coins might be getting a bad rap amongst governments and banks directly themselves. Let me see here. Here it goes. So this is from Cointelegraph, and I'll pull it up on the screen. And so let me see here. It looks like as of this upcoming week or next week, the IMF will be reviewing and taking a look a little bit deeper into stable coins being offered. And one of the things that stood out was that he mentioned that it will destabilize the financial system. And when I read that, the first thing that came to mind is destabilize the financial system, which probably means remove power and remove a little bit of authority and control of them to, expand the balance sheets and to borrow and to create this debt-based system. Because once again, if they don't control it, then they can't keep this thing going. So interesting article here, but it says G7's global stablecoins pose threat to the financial stability. So we're going to be getting a little IMF paper, I'm sure, pretty soon with their assessment of the whole situation. So who knows? What are your thoughts on this?
It's part of keeping the deep state globalists in power longer by going to a purely digital encrypted fiat currency standard. Mm-hmm. So, definitely. But, people say that going into these things, they're non-seizable, right? I saw an article about that, and someone might come to the conclusion, well, that could be one of the reasons why they're a threat, because it's outside of the control of the government. I don't buy into that. I think the government can co-opt these if they want to co-opt them.
Yeah.
I don't think that, it's as much of a threat as they're saying it is, because I think that they have the control in the end.
Yeah.
And in the meantime, I think it helps to stir all of these things, get the focus on the digital currencies where they want to take us, and keep the focus off of real money, gold and silver.
Yeah.
So, it all plays in line. Interestingly too, right? Just this weekend, the Dutch central bank came out with that thing talking about, something about, the world should be going back to a gold standard here. And this was actually the central bank, right? The Dutch central bank. I didn't read the article, but it just goes to show you that, the sooner or later, these conversations are going to have to come back to gold and silver, because gold and silver are in strong hands, I would say, at this point, right? Mm-hmm. It's been a brutal, 8 years if you want to count it since 2011, over 8 years if you want to count it from, May 1st, 2011, basically. And, what it boils down to is anybody who was weak with gold or silver at that point has probably pretty much gotten out of it now. So I think that, to be able to keep this, because here's the thing, right? And this is the other thing I was thinking about when it comes to the, the COMEX and Chinese starting to move in, right? If we talk about the markets seizing up, what is the most important market of all? There's two, right? The oil market and the gold market. So by getting in there with the gold market, it just goes to show that, these are big developments that are taking place behind the scenes, even if our distractions are set to the digital crypto era. And what I'm referring to is, the little word from the Dutch here, the move from the Chinese onto the COMEX there, all of this, gold selling, sanctions avoiding stuff here, all of this, low demand for U.S. treasuries there. All of these little things just seem like one-offs, but when you paint the picture together, it says, hey, we really are about to have something happen in the gold and silver stage.
Very true. And I do agree with that 100%. And the problem with that is something is already taking place. I'm sure a lot of people, especially if you watch it, you can agree that things are already unfolding. It's just a matter of how they're being leaked out to the mainstream media and things that's not being told. And so when I see articles like this, I'm going to put up an article here. It just really makes me, question once again. We have more mainstream news says investors are flocking to money markets at the highest rate since the financial crisis. And so I've actually saw 2 articles of this nature from 2 different sources about the same subject matter. But it talks about how people are getting out of financial products and are getting into cash in the meantime, looking to take advantage of whatever else is coming. And so I bet a lot of those people who are going into cash, they may not view gold and silver as the safest haven because they're anticipating something normal, like a normal typical recession where there's a 30-40% drop dip. You buy it and it goes back up. But yet, a lot of these people here don't know that this could be the shift of all shifts, because if they paid attention to what's happening out east with the gold accumulation, and as you mentioned, the Shanghai futures and being run by the COMEX and all that stuff, if you put all those dominoes together, man, we got one big mess unfolding that's going to surpass any of this other financial recession stuff before.
Did you listen to that Craig Hemke, Willem Middlecoop podcast from last Thursday? It was actually really good. One of the things to point out, because it ties in a couple weeks ago what I said, where I think the gold and silver futures market is just going away. But they were talking about just in the 70s, there used to be a potato futures market in the United States, and that went away. And now it's a cash and carry type of system for the potato harvest in the United States. So, And the thing about this move into this money market stuff, this stuff has risk. People don't understand it, but this has risk. People assume that it's cash and that it's safe. But $1 in a money market account does not guarantee that you have $1 in a money market account. You can have that drop below the value of $1. So it's not necessarily par for that matter. Secondly, there's this whole concept of gating, where if they have a run on that money market account, then they will gate those funds and not let any investors pull stuff out until they come up with some sort of distribution plan. So, and some sort of new system for the way that they're allowing customers to withdraw those funds from the money market account. So just going into a money market account in and of itself, that's not really safe either. That's like, someone shouts fire in a theater, and instead of running for the exit, you run into the bathroom. Well, that's not going to do anything.
So here's another article I'll share with you. Actually, I did a little short video on this earlier, but this is exactly an example of what you're talking about here. So it says Korea's top hedge fund freezes $700 million as investors try to withdraw. And this is as of today. So it started last week, but we're just, it's just surfacing here on this Monday morning. And they said there's more millions that will be frozen because they can't liquidate these convertible bonds, a financial product that they spun out in the last every years. Now people, because of some problems with this particular hedge fund, so you got other investors and other hedge funds now questioning whether or not they'll be able to exit when it's time. And so this could be a trigger to a contagious type of event that a lot of people are like, hey, I wonder, can I really get to my funds when I need it? Let me test it.
People talk about the straw that breaks the camel's back. And I have no idea, but this literally just gave me goosebumps when you read that. And I have no idea because it's something that shouldn't give me goosebumps whatsoever. But think about this. It didn't say Korea's hedge fund. It says Korea's top hedge fund. Right? When I think of Korea, I think of big time players when it comes to like Samsung and Hyundai. I mean, they got their high tech down to a science. So, as far as information technology, in hedge funds, right? Robo trading, all this and all that. When I think that, the top hedge fund in Korea, this is a big deal. I mean, this is a seriously big deal. And then how levered up are they? What is the derivative exposure on that leverage? So it's just like all of these little things. You don't know which is going to be that straw that breaks that camel's back, but it's going to be one of these. And there's so many of them coming down now that it could literally be anything.
And think about this. All of the public's investable capital, investing all the capital that they've set aside for a rainy day in their future is tied into these type of products, and they're being monitored and taken care of by institutions like this. That prior to the last decade, there might not have been much question as to whether or not they can actually make a return on those investments that they're holding for people, but now they're getting riskier. So this is an example here of over the last several years now, because of the yield situation, the bonds being junk and the negative this, negative that, you got investors out here they have to chase ways of allowing that pool of funds to grow over time, and they're having problems. So which means they got to speculate and go out there and put your money at risk. So at this with this current point, with everything that's happening and with the Federal Reserve leading the way, I have very little confidence that there will be a comfortable resolution to all this, to where people can actually 5 years from now, nevertheless, maybe 3, 4, actually see a return that they're going to be happy with in the days ahead, nevertheless, the future. Like, let's get out of the future, because 10, 20, 30 years, I don't see none of this panning out well for anybody that's thinking that a retirement account going to be safe and sound and grow between now and then with no hiccups. So I'm more so concerned with the next year. Like, there's going to be more people trying to get out. They can't get out, and they're going to be stuck. Another guy, Michael Woodruff in the UK, I did a little article on that. And so in July, he froze up how many ever 100 million, and to this day, people still can't get out. Mm-hmm. And his shares and all his things he has them in has dropped. So think about sitting at home, getting a letter, and you just see your number just dwindle, and you can't even get it. They won't even let you have access to it. How mad you would be.
Mm-hmm, mm-hmm. Yeah, definitely. And that's a bad feeling too, Mike. You see that money going down and you're powerless to get it. But hey, those are the terms and conditions.
And those are the probably people that need it the most. Like, those are probably people entering that retirement phase, if not already in retirement, withdrawn, supposed to be getting a little payout from that monthly or whatever, mm-hmm. and it's frozen. So your monthly allowance is frozen.
Yeah, the problem is we have like this, I don't know if you want to call it like a bastardized financial system or a Frankenstein financial system, but it's like this, right? And this goes back to that port thing that we opened with. Like, think about like GM, right? Mm-hmm. What is GM? They're an automobile manufacturer. Mm-hmm. They're supposed to be manufacturing automobiles, and they're supposed to be becoming more efficient at it, making them better while at the same time making them cheaper, right? That's the whole goal of manufacturing, at least theoretically.
Yeah.
But where are they making all their money? They're making all their money on the financing with GM Finance, right? So, it's the same thing with this trade, right? You don't, say, okay, well, there's this port here and there's this national security issue and we got some trade issues. So let's go in and let a financial firm take that over. That's not the way that you clear things up. I remember one time we had a comment over on Silver Doctors, and the point was great because I was writing this article about the last like Blockbuster, or I think they're all finally closed down now. This was like last year. Mm-hmm. I can't remember if they're all closed down.
I think I saw somebody. There's one left somewhere. There's one on the West Coast, I think.
It was either because the last two were in Alaska, mm-hmm. and that's when I was writing the article. And there was one still left, but might have been in Utah where there's like a lot of preppers and they're still into like stockpiling VHSs and stuff like that. But I can't remember. Where was I going with that? Oh, but here's the thing, right? This guy said, I used to work for Blockbuster, and I knew the company was going down in the dumps when they made more money off of late fees than they did off of renting movies, right? So if you just think about it, I mean, we just have this perverted financialization everywhere in the markets, everywhere in the economy. It's been going on for decades now, and now it's just coming to a head. That's all it is. I mean, I didn't wake up today looking to have this kind of like cynical, gloomy, or weird attitude about all this stuff. But that's just what I'm saying, right? Because the way I look at it, it's like, hello, how come people can't see what's going on and what's about to happen? I think that people are literally about to sleepwalk their way in, like off of a cliff into disaster.
Yeah.
Thoughts on any of that, Mike? Just when it comes down to companies, and company like, or who were we talking about last week when it was looking to shore up their pensions, right?
Yeah.
And then the fact that, it was GM, wasn't it? When we were talking about they were on strike and they had lost all this money in their pensions, although they were on a massive buyback spree for 10 years.
Buyback spree. Oh, yeah.
It was GM, right? So it's just like this nasty financialization that's just permeated all sectors of the economy.
And just today, I got news about the whole UAW. And so what's really interesting about the UAW now encouraging all of their members to strike. This is the greatest time for them to strike. Is the fact that the UAW has been investigated. Their executive board is having major issues. So you got all that up top, and you got the people. Them telling 50,000 plus people don't work. So they got conflict up top, and then they telling people not to work. And they just recently, I think last week, they upped the weekly pay. So I didn't see the exact number, but they gave the people, the strikers, the protesters, an increase in their pay. And I'm thinking like they're getting a couple $100s where they can be getting their full-fledged pay while the UAW iron out their issues if they really cared enough to not include their issues in with the people's issues and make it one big party. Because I think it's all a diversion tactic to keep the attention away from UAW issues up top, because there's a lot of corruption and a lot of stealing up top. So they try to merge us together. But today, another company associated with the UAW decided to strike as well. I think it's about 2,500, 3,000 people who are not even related to the automotive sector directly. They said they're going to strike as well. And I think probably because the UAW said, hey, we got to do all this together. I'm thinking like, man, all these people are doing is signing their pink slips ahead of time. Because once again, as you just hinted earlier, GM makes all their money off financing. If nobody's out here borrowing, then who's going to be buying cars? Then what's going to be the need to have employees to build cars?
Yeah.
So, yeah.
Yeah, we talk about that demand, pulling the demand forward, right? And that's what we've done for the last 10 years. Yeah. Instead of letting the market go through natural market forces of the creative capital destruction, we never let that happen. So we've just pulled everything forward. And and then the other thing is, with so much regulation on GM and Ford and these things, they're not competitive overseas. Now, they have different makes and models that they sell overseas, which are absolutely awesome. I think Americans would love these vehicles. Shame that we're not for these vehicles here, right? Specifically, I'm thinking of like the Dodge 700, which is like a car-based truck, where I'm thinking about that compact 4-door, 1-ton diesel 4x4 Ford that's smaller than a Ford Ranger. These really awesome vehicles that are offered overseas are not offered over here. So, even when they're offering those, they still can't compete. Like, look at Harley's problems also, for example. So, all of this stuff, it is just delaying the day of reckoning for what we have coming down the pike, Mike.
Yeah, and it's bringing down a lot of innocent people with them, and they don't even know that they're being led astray. Like, the whole UAW situation, they're just leading the people directly to the unemployment line. But while you were talking, I pulled up a little article about the last Blockbuster. And so it says the world's last Blockbuster has no plans to close. It says, with the closing of Blockbuster store in Australia, the one in Bend, Oregon, will be the last to survive changes in technology and shopping that has reshaped the way people watch movies at home. So it looks like in Bend, Oregon, has 4,000 account holders as of now. So it's still up and running. And the question is, where do they get their movies from? Because I imagine corporate Blockbusters used to be the ones that roll out movies. So I'd assume if Blockbusters as a corporation may have closed or whatever, where are they sourcing their movies from? So they probably got Netflix in there.
Yeah, exactly. Oh, man.
Oh, my goodness. So, there's one left. Yeah, more power to them. So, interesting.
But it just goes to show that in this quest for greed, in this greedy quest for more and more and more on the financial level, the actual premise of why you were in business in the first place just gets cast aside.
Yeah. Now, okay, so I just see in the chat here, I'm not sure what this is referring to, but it just says the cost of living is too high. And so just yesterday, I was watching a program with my wife or whatever, and it's about tiny houses. And so there's actual YouTubers out there that have positioned themselves where they travel around the world looking at people, show off their tiny houses. And I'm watching these programs, and the primary theme that from everybody who shared why they did the tiny house project was because the cost of living was too high. And so it was in San Diego. Somebody took a trailer, built something on top of it, looked really nice. In Vancouver, there were some people who, they said a 1,200 square foot house in Vancouver would have started off at $800,000. It cost them $115,000 to build a house on wheels. And I'm thinking I couldn't have imagined, or I'm sure a lot of people couldn't have imagined 20 years, 30 years ago, having their dreams reduced to the affordability of a house on wheels as a dream home. People are saying this is my dream home. I'm like, man, it's on wheels. So I just find out to be very interesting. So we have a call, and I want to get your thoughts on that.
Yeah, and I'm going to rain on that parade too, Mike. So
all right, please do. All right, let's we get this. Hello, caller. What's your name? Where you calling from?
Hey, what's going on, Mike? It's Kenny from Pensacola, Florida.
Kenny from Pensacola, Florida. How you doing, my friend? What's on your mind?
Hey, what's going on, guys? So, pretty much, I was asked a question, and I was just listening. Pretty much, if we're going to go through this inflationary period, why would we get precious metals instead of investing in the stock market? So I was listening to your response.
Good job. Appreciate your caller, my friend. All right, good question there. Paul, want to touch on that one?
Well, several reasons, because just based on the pure math, right? The Fed is dedicated to 2% inflation. So that's all things, 2%. They want 2% consumer inflation. So what they're saying is they want the dollar to buy 2% more each year, and they want the price of gold and silver to go up 2% every year. So there's a 4% swing. So just based on the pure math, gold and silver are going to keep up with that inflation. Mm-hmm. Then secondly, it comes down to nominal gains versus real gains. Mm-hmm. And that's the same thing like where gold and silver win in inflation or in deflation. Mm-hmm. So in inflation, right, we look at the top performing stock markets in the world, and they're like the South African stock market, the Venezuelan stock market, all these stock markets where these currencies are not, and these economies are not in good shape. Mm-hmm. So the stock market could be going up, but one, we don't know when it can crash. We don't know what the downside is to that crash, and we don't know if we're going to be able to time it and be able to get out in time. Mm-hmm. Right? So then that's one. So in real terms, if the currency is inflating away, maintaining through that, because the crash is coming, right? It's gone on for 10 years. Mathematically, it can't keep going on forever, or it's just going to hyperinflate. Mm-hmm. So, gold and silver hedges against that. In real terms, right, when we talk about deflation, stock market going down or real estate going down or something, in real terms, gold and silver also increase your purchasing power because they don't go down quite as fast. So gold and silver are your stability throughout these times. They're what you would use to protect against a stock market decline, to protect against the inflation, to put on a hedge against the governments. Thoughts on any of this, Mike?
Yeah, I do agree. And so very first thought when I heard that question was gold and silver to me is money. And so it'd be worth your while in the days ahead, especially as the system shifts into whatever they're going to be given to us, to have your weight set aside and not even look at it as something to even touch. But then again, you're going to have your national currency. Whatever country you're in, your national currency is what you use to interact with daily. And that's what you would use to speculate with. So if you feel comfortable riding the wave up of artificial gains in the stock market, then it's definitely number-wise, there's no telling how high the Dow can go, but yet is it true value? And then when it's time to liquidate some of those gains, I would imagine that the currency that has ran that stock market up to whatever it might be, has probably lost a lot of purchasing power along the way. So when you look to get out of it, you're going to have probably more paper and digital terms. But once again, if we are in a real excessive inflationary environment, you're still not going to be able to really purchase that much because the cost of living, a house will probably be, who knows what it'll be in comparison to them shares of stocks you're looking to buy it with, to where it might end up being a break even, or you end up coming out on the lower end because it's you getting out of that system and still needing to survive with tangible goods, which will always outpace any type of gains I think you can probably get in the stock market. So that's just my opinion there. I'm not a financial guy or technical analysis or whatever. So
no, and it's awesome. And you bring up great points. Is the caller still on the line?
He's not. He said he'll listen.
And you bring up great points, Mike, because what we're doing here, this is awesome. It's just we're just like, we're building things on top of each other, and they're all equally valid. Here's another thing to consider: the counterparty risk, right? After September 11th, Bush closed the stock market for like a week. Right? So, who's to say they're not just going to say, sorry, the stock market's closed. We're going to let the dust settle and we're going to sort that out. Nobody knows when this stuff is going to happen. Mm-hmm. So if you have a gold and silver coin in your hand, that's yours. And that has no counterparty risk other than your hand. Right? Yeah. So when it comes to the stock market, that is a ton of counterparty risk. And history has proven time and time again that when push comes to shove, government's going to flip the kill switch on it.
Yeah, and then I think, I've spoken with people who reference certain companies that they have confidence in that will be up and running through all the transitionary periods. But I'm thinking, me personally, I'm not well versed in that type of investing to really feel confident in owning shares of a corporation that on the other side might be around, might not be around. I've gotten to the point where I don't trust much, but I do trust more of what I can control directly in my own possession, preferably, because it just takes a lot of risk on your part to rely upon any individual or any company or any institution or any system that has been up and running for the last 100 years that's now being challenged. So that's a lot of trust you got to go through, all in chasing gains. Is it worth it to you? Is it going to be your question? I think we're at the point of wealth preservation as opposed to gains, me personally. So.
Yeah, and then who is the one, who do these companies have in mind? Ultimately, not the person who's got the account at the brokerage firm. That's
the shareholders, the primary share, the board, the people that run and call the shots. They are the ones that operate in their best interest.
So gold and silver in hand, that's me in control of that, and that's me looking out for my best interest. Whereas a bank, I don't know who their best interest is, but I know for a fact it is not me.
Right. I do agree. So it looks like we have a question or highlight. Johnny Doe says Berlin Volksbank in Germany is charging 0.5% interest on any savings over 110,000 euros, literally charging savers to keep money in the bank. Negative rates coming to the USA. Yeah, I don't doubt it whatsoever. Like, this is something that I really encourage people to take more time to look into, because we're already not really receiving much at this current moment. And so the chance of them actually they won't be raising rates in a positive way when they do raise rates. It's going to be as a response to a complete meltdown. And even at that point, I don't think banks are going to be willing to pay you at that point, because they're going to be trying to use something other than probably dollars or whatever the legal tender might be. So
that's and people talk about these negative rates. Wow, that's just for government debt. No, here's another example, assuming that this is true, from Johnny Doe, and thank you for bringing that up.
So I pulled up an article. I pulled up the article here from looks like it was posted on Bloomberg last week. So this looks
that's negative. So that's negative retail rates, and 110,000. That's not a lot of money, right?
Yeah.
I mean, a lot of that's nothing, right?
Right.
I mean, it's a lot of money to some people, I'm sure. Don't let me belittle it. But just in the grand scheme of things, that is not a lot of money. And what happens if it dips under? Do they still keep pulling out negative 0.5%?
Yeah, that's the thing. Like, yeah. So apart from people who have well beyond that number, I think more people who are around that number, they might say, okay, because they don't have any knowledge or know where to put it, they're like, okay, I'll keep it there. That's only a couple dollars every month, whatever. I'm okay with that. But people who got a lot more than that, they're probably ones like, okay, we got to start doing something, because the greater that number is that you in your savings account, the greater they're taking out per month, percentage wise. And so definitely, I think people can ride with this for a while, but yet the percentage of them what they're taking out will only get bigger as they get more desperate to stay in business. So it's all about banks staying in business now. So from everything that will be done monetary policy wise from any central bank is going to be about the banks first, government second, the people last. Mm-hmm. So, yeah, and that's another question I have for you. In the next 10 years, as currencies unravel because of inflation and just lack of confidence in them, whatever country you're in, will banks still be around in the same way they are now?
That's a good question.
Because I don't think they will be. Because, once again, if you're witnessing your currency go belly up and the banks are charging you for that as well, what do you need a bank for? You know what I'm saying? Like, that's where you got to really say, okay, let me figure out how to hold my own somehow, some way, because I'm only going to lose by putting it in the banks.
Was that a question for the audience?
That was a question for you.
Oh, for me.
But if you want to answer, I'll answer myself.
No, I mean, you can keep going if you have more to add on.
No, that was it. That was it. Go ahead, do you.
Yeah, because, you get down to the whole fundamental premise of what is a bank, right? The whole purpose of a bank is to facilitate money and savings and loans between parties, right? You borrow short and you lend long, right? Yeah. So you get a deposit, and then because of fractional reserve banking, then they can pay the depositor 1% and loan out some money for 2%, and then they make a percent on the spread. So that's that's what we theoretically should be getting back to, is just the very fundamental premise of what banking is supposed to be.
Yeah.
Right. Yeah. There was another point I was going to make, but I couldn't remember it because I was going to say something. Oh, just to follow up on that tiny house thing. But here's the thing, right? The government hates tiny houses, right? Because and you read it all the time, right? When I was in the Army and getting out of the Army and just out of the Army, I could feel for these guys, right? They not necessarily a tiny house, but they'll buy a trailer, right? And then they'll put it on some plot, some 1 acre or yard that they bought out in the country. And then the county or the city gives them a hard time. No, you got to connect up to the electricity lines. Well, we don't want it. No, you got to connect up to the water and the sewer. Well, we don't want it. No, you got it. No, you know what I mean? So it's the government is going to get theirs. They're going to force you to do something, whether your house is mobile or not. There's no escaping any of this, right? Yeah. None of this is going to be escaped.
And so hearing stories like that of how they're being forced to or heavily encouraged to connect, what does that tell me? Is that, okay, why do they want me to connect so much? Is it because they want money, they want me to pay for the services, or do they want access into my life still to where I'm thinking about, when it comes to the grid, I've heard all types of things about how through the electrical wires they can listen and watch and all types of, it goes much deeper than what I really know. But I'm thinking like, what if you don't really want to connect? What if you really want to opt out?
Mm-hmm.
People should have an ability to opt out. So that's one thing I think will grow in this next decade, where people will be forced out because they can't afford nothing. So if you can't afford to pay your water bill, afford to pay your light bill, and you have a solar system, you ain't got no choice. Like DTE, like how can I get back in the system when I can't afford it? Or so yeah.
Yeah, this is what's coming. You know what's coming, and that's why I say it's going to be like Soviet-style collapse, because it's just a breakdown of the government institutions and programs that we come to know right now.
Yeah.
I was looking at my water bill the other day, and my water bill is $113 a month, Mike.
Yeah.
And that's like, we don't have a swimming pool, right? It's like, my goodness, and then everywhere you look, it used to cost nothing to send your kids to school. And then you started complaining about the school supplies. You're like, well, that's kind of expensive. And now it's like, now they have you sign up online and you pay all these fees for a public, high school. It's like, my goodness, when did high school become like college? Aren't I already paying property taxes for all this stuff? And aren't they already approving all these bonds during the elections for all this stuff? It's like, my goodness, more and more is what they want, Mike.
That's all it boils down to, man. But hey, we're approaching our 50-minute mark. And so going to get ready to dial back a little bit. So for those that have been watching us, we appreciate you tuning in. And any last thoughts, Paul, you want to leave us with, or anybody want to leave a thought in the chat, let us know. But we'll be back on Wednesday, same time, same place. And of course, between now and then, there'll be a lot more things to cover. So as always, if you come across articles, shoot a comment down in the video description, and we'll try to get to it on Wednesday. Or give us a call on Wednesday. We can get it going for you. So any last thoughts?
Yeah, just last thoughts. Last week and even on Friday especially, I'm really kind of just reassessing the gold and silver market right now, because I don't know how the China thing moving into the COMEX is going to play into it. I think it's a big deal. I just don't know how it's a big deal yet. So I'm kind of taking a step back. That's why I'm looking a little bit at the stock market this week, and I'm kind of watching that. I'm also watching yields, which are trading like cryptocurrencies, which is not a good thing for the world reserve currency.
Yeah.
And trade war and Fed's QE, those are going to be the two big issues. So this is an interesting week. There's lots of stuff going on, but I think that everybody's just kind of sleepwalking their way into a disaster here.
Yeah.
So it'll be interesting to see what we're talking about coming Wednesday, Mike.
Right. I appreciate those thoughts. And as always, for those that are watching, we do have a question here, but I'll save that question for Wednesday, because it's about cryptocurrency privacy, KYC regulation. And so me and Paul have a similar viewpoints on it. And so I definitely, because I've done some videos recently as a skeptic. So I'll definitely want to tell you about those videos as well. But let's pick up with that thought on Wednesday. So I'll make a note to touch off with that on Wednesday. But other than that, everybody's been great hanging out. If you enjoyed the back and forth, click the button beneath this video here, a little thumbs up, show your support, and share this information, because once again, you won't find this on your mainstream news sources, because we don't read off teleprompters. So this is real news off the top of our head. So real thoughts, rather. But anyway, everybody be blessed, be safe, and we'll see you guys later. Peace.